The biggest one-month jump in the 39-year history of the index on economic optimism and reasons to hire and lower uncertainty.
Small business optimism just made its highest monthly increase on record, taking it back to the highest levels in over 3 years.
99.9% of businesses in this company have less than 500 people, which are small businesses. They are about as excited as they've ever been.
Small businesses are often considered the backbone to the economy. And when they gain this type of confidence, they tend to hire more employees, invest in expansion, and increase production. More GDP, higher earnings, and stocks perform. But where is all this optimism coming from?
We're going to do things, I think, that haven't been really done before. We're going to be cutting taxes still further. You know, we got it down to 21%. We're going to bring it down even below that. You pay 21 if you don't build here, and meaning your product or whatever it is you're building. And if you do, we're going to try getting it down to 15%. But you have to build your product, make your product in the USA.
We're stepping into, I would say, the most pro-growth, pro-business, pro-American administration I've perhaps seen in my adult lifetime.
The market believes Trump will supercharge growth. He's focused on how the market responds, and that puts a psychological floor on the market. And Wall Street likes to call this the Trump put.
The Trump put, explain.
The Trump put is, on the simplest level, a White House that is going to measure its success by how the stock market performs. There is going to be a lot of enthusiasm about a new White House, and we know there's still a ton of cash and a lot of low leverage on the sidelines. That's why stocks can rally, and investors who might have been cautious for the last few years now want to be risk on next year.
We're going to be way ahead of AI, and we've got to produce tremendous amounts of electricity. We need more than twice what we already have. We're going to do something great with crypto because we don't want China or anybody else. Others are embracing it, and we want to be the head.
Artificial intelligence, crypto, energy generation, these are the market themes with massive regulatory tailwinds. And all this investment will boost economic activity pouring into other sectors. And this is why optimism is so elevated. Investors are excited about 2025. We can also observe this optimism through the interest rate market, the bond market, the market that sets interest rates.
What we're more focused on is rate volatility. So just like the VIX does it for equity, there's an index for interest rate volatility, and we're about to breach the levels that we have not seen since before the March of 2022 Fed tightening cycle. So that's one reason to be excited.
The MOVE Index measures uncertainty about U.S. debt, interest rates, inflation, and geopolitical risks, and it's headed for the lowest levels in 3 years. And this suggests further that investors are very optimistic about the future. Now, we want to see this optimism translate into real growth. But concerns always exist, and we got to ask, do the macro conditions support this optimism? Where are the risks? So first, let's start with inflation.
We're seeing inflation pick up again because, look, let's be honest, financial conditions are very loose again. We have now animal spirits picking up because of the election outcome, and people are excited. That excitement has a negative consequence, which is that all of a sudden inflation starts to pick up again, and maybe the Fed can't cut.
One of the main threats to optimism is that inflation reaccelerates, but as you'll see soon, the data doesn't support that.
The CPI was sticky, but it was largely in line. Is that how you read it?
The CPI print today allows people to imagine a path to 2% because shelter now is cooling to a level that's in line. Auto insurance, which was at 25% earlier this year over year, is now down to 13%. So the two biggest contributors to CPI are in a downshift.
When we turn to the data, it's pretty obvious inflation is falling. One bump higher isn't cause for concern. Shelter is the largest component, and we see nothing but downside. Motor vehicle inflation slightly rose, but it's coming from a negative level, meaning prices are still falling, just at a slower pace. And supply chain managers, which lead the inflation, are not reporting any increases. And gasoline prices are also starting to break lower. Inflation is cooling, which means the Fed will cut, and the market loves cuts as long as the cuts are about normalizing interest rates. On the other hand, employment trends are slipping. Although jobs growth is still robust, the trend is much lower, and we see unemployment slowly grinding higher.
We're going to have another growth scare. It's going to emanate from the housing market. That's going to probably be in late Q1, early Q2. And there's going to be a little bit of pain in that process. But ultimately, I think the Fed will cut more than the consensus expects. And the soft landing continues, and we end up with a double-digit gain next year.
December 18th, the Fed will cut rates, and this is where the Santa Claus rally begins. Rate cuts bring optimism, and it's not just the Fed cutting rates. We also have the Bank of Canada, the Bank of England and the Swiss bank, all cutting rates while China is still stimulating. So inflation is falling, growth is stable, the Fed is cutting rates, and business optimism is turning up.
And now we're entering the final weeks of the year where we know there's still $7 trillion of cash on the sidelines and quite good visibility next year. So I think stocks should finish very strong.
And with all this deregulation, the industry that stands to make the biggest gains is crypto.
We're going to do something great with crypto because we don't want China or anybody else. Others are embracing it, and we want to be the head.
Slightly longer term, I think what this opens is crypto being embraced as kind of the new infrastructure layer behind the financial system. One way to look at crypto is as a tradable asset like equities, options, and futures. The other way to look at it, which I think is more interesting, is as the next step in the technology evolution from mainframe to cloud to blockchain. And we see how efficient it is as an infrastructure layer. We run both businesses, crypto and traditional finance at scale. Crypto businesses 10 times lower costs. And that's because a lot of these intermediaries that run on mainframe, like clearinghouses, transfer agents, payment processors, are just replaced by software. What you're likely to see is tokenization, having more real-life assets, real-world assets on blockchains. There's big potential. I think Robinhood can actually be a leader in that space.